Welcome to the deep dive. Today, we're looking at two really big names in disruptive tech. Companies that have, well, finally hit that milestone of profitability. And their stocks. They've definitely shown it.
Yeah, we're talking about SoFi Technologies and Uber Technologies.
Exactly.
And it's interesting looking at the sources, because the whole story around them has changed, hasn't it? It used to be all about growth, 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 whatever the cost.
You're right. Burning cash like there was no tomorrow.
But now SoFi and Uber, they've actually started making money consistently. They're in the black.
Yeah, solid footing now. But look, we're not just here to recap old news. The real reason we're diving in today, based on our sources, is this question. Even after these stocks have run up quite a bit, is it too late? The argument we're exploring is why it might not be too late, why these companies could still deliver, better than average returns looking ahead.
So what are the actual catalysts? What's driving the future growth? Because just being profitable now,
Yeah.
that's one thing. Sustaining it and growing from here, that's another challenge.
Precisely.
Yeah.
And it seems tied into how they're tapping into, well, the next generation of consumers, their behaviors, their preferences.
That makes sense. Profitability is the baseline. Now they need that long-term edge, something defensible.
Okay, so let's kick off with SoFi. SoFi Technologies. The picture painted here is a company that's really firing on all cylinders.
Yeah, they're building this whole digital financial world, right? Aimed squarely at younger people who, let's be honest, often aren't huge fans of traditional banks.
Totally. And that expanding digital ecosystem is what's driving the revenue, the earnings. It's all clicking.
And a key piece of that, from what I'm seeing, isn't just getting new users. It's how they make each user more valuable over time. Cross-selling.
Right. Let's look at the numbers they shared. 12.6 million members.
Okay.
And 18.6 million products being used.
So wait, if you just do the quick math there, 18.6 divided by 12.6, that's less than 1.5 products per member.
Yeah, about 1.5 on average, which, when you think about it, for a company built on being this all-in-one financial hub, that feels kind of low, doesn't it?
It really does. It means a lot of people are maybe just using them for one thing, like maybe a student loan refi or just the checking account.
Exactly. And that seems to be the big opportunity right there.
Okay. So the idea is if they can just nudge that ratio up from 1.5 to, say, 2 products per member, or even 2.5.
That's potentially massive growth just from the existing user base. It's like the lowest hanging fruit they have.
And it's probably more profitable growth too, right? Because they already acquired the customer.
Exactly. Plus, don't forget they have that national bank charter.
Oh, right, which is a huge deal. Their main competitors like Robinhood or Block, they don't have that.
Nope. So SoFi's cost of capital is lower. Every extra product they sell to someone who's already a member, it's just fundamentally more profitable for SoFi than it would be for those other guys.
That really cements their advantage, their long-term moat, I guess you'd call it. Makes it much harder for others to compete on price or features across the board.
Okay, so strategy 1. Deepen the relationship, sell more stuff to the people already there. Which brings us to this. Kind of surprising move they made. Bringing back crypto trading.
Yeah, I saw that. Didn't they get out of the crypto business just a couple of years ago?
They did. They shut it down. So why the U-turn?
Well, the sources suggest a few things. Back then, the regulations were maybe murkier, and running a compliant crypto operation was expensive, high overhead.
Right, lots of uncertainties.
But now, the market's evolved a bit. Maybe the regulatory picture is slightly clearer. But I think the big driver is competition. Think about their main customer base. These younger, often higher income folks. Statistically, they're way more likely to be interested in crypto.
Okay, yeah, that tracks.
So if SoFi doesn't offer crypto trading, where do those customers go? They'll just use Robinhood or Coinbase or Block for their crypto stuff.
And SoFi risks losing the rest of their business, potentially. The core banking, the loans, the investments.
Exactly. It's about keeping the customer sticky, keeping everything under one roof. So bringing crypto back isn't just about chasing crypto trading fees. It's about preventing leakage. It's a defensive move, almost.
Makes sense. It's a feature to keep people in the SoFi ecosystem. And they're adding other things too, right? Like international money transfers.
Yeah, same logic applies there.
Yeah.
If a SoFi customer needs to send money overseas, SoFi wants to handle that transaction. Keep the fee, sure. But more importantly, keep the customer from needing to go use a competitor like Wise or Western Union.
Right. Close all the exit ramps.
Pretty much. Keep them locked into the SoFi world.
So if you zoom out, The long-term play here, according to the analysis, is really about demographics. They've captured these younger users,
Hmm.
and the bet is, as these users get older, earn more, buy houses, save for retirement, SoFi will just naturally capture all that future financial activity.
They're playing the long game, building that lifetime value with a generation that's potentially going to be very wealthy. It's like, we got you early, now we'll grow with you.
Okay, so that's SoFi, building the digital bank for the next generation. Now let's switch gears to Uber, because they're sort of tackling the other big piece of that generation's life, how they get around.
Yeah, a good contrast. Uber's story is, well, it's been a roller coaster. For years, all you heard was net losses, right? Billions burned, and endless fights with regulators everywhere.
Oh, yeah, huge skepticism for a long time. Could they ever make money?
But they turned it around. Now they're actually quite profitable. Revenue growth is impressive, and they
Yeah.
navigated through all that.
So what's the key now? What's underpinning their dominance, especially now that they've proven they can make money?
It really comes down to the network effect.
Yeah.
But it's like network effect on steroids now.
How so?
Well, they just have this critical mass. So many drivers, so many restaurants for Uber Eats, so many grocery stores now, and obviously tons of riders. Each side of that network makes the other side more valuable.
Right, more drivers means shorter waits for riders, which attracts more riders, which attracts more drivers.
Exactly. And more restaurants means more choice for eaters, which attracts more eaters, which makes it essential for restaurants to be on the platform. It's this flywheel that just gets bigger and stronger.
And competitors just, they can't easily replicate that scale, can they?
Not quickly and not cheaply. That established network is Uber's massive competitive advantage now.
The numbers are pretty staggering. End of Q2, they had, what, 180 million active consumers globally?
Yeah, 180 million. And that was up 15% from the year before.
15% growth on a base that large. That's still really strong. But it also makes you wonder, how much bigger can they get? Are they hitting saturation, especially in developed markets?
That's a logical question, isn't it? You hear 180 million, you think, wow, they must be everywhere. I mean, I certainly thought that.
Yeah.
But then you dig into the source material, and there's this kind of shocking detail about market penetration.
Okay, yeah. Get this. Even in Uber's most established, most mature markets, think big cities in the US, in Europe.
Right, where you feel like everyone uses Uber.
You'd think. But in most of those places, Uber's monthly active users only make up about 10%, sometimes even less, of the adult population aged 18 and over.
Wait, really? Only 10%?
10%? That number.
Yeah.
It just reframes the whole growth picture, doesn't it?
Absolutely. It means the story isn't really about finding new countries to launch in anymore. It's about going deeper in the places they already are.
Yeah. Imagine if they can just push that 10% up to, say, 15% or 20%, just in their existing strongholds.
That alone is a massive runway for growth. They don't need some revolutionary new product. They just need more people in New York or London or Paris to use Uber or Uber Eats a bit more often.
And there are bigger trends pushing people in that direction anyway, right? The demographic shifts.
Exactly. You look at younger generations, like Gen Z. Compared to older generations at the same age, they're significantly less likely to get a driver's license, less likely to own a car.
Yeah, you hear that a lot. Cost of ownership, insurance, parking.
Yeah.
Plus maybe just different priorities. Urban living.
Right. Whatever the reasons, Uber is perfectly positioned to benefit from that shift. If you don't own a car or even have a license, Uber becomes a default option for getting around.
So society is kind of moving towards their model organically. But what about disruption hitting them? I mean, the big one everyone talks about is autonomous vehicles. Won't that eventually kill their rideshare business if there are no drivers?
But that's where Uber seems to have played it pretty smart. Instead of seeing autonomous vehicles, self-driving cars, as this existential threat, they seem to be turning it into an opportunity. They're partnering with the leaders in autonomous tech, like Waymo and others.
So they're not trying to build the cars themselves?
Not primarily, no. They're focused on integrating autonomous vehicles onto the Uber platform. So whether you're picked up by a human driver or a robot car.
You still summon it through the Uber app.
Yeah.
And pay through Uber.
Precisely. They want to control the network, the routing, the customer interface, the payment, essentially the whole mobility operating system.
So they shift from being mainly a marketplace connecting drivers and riders to being the essential software layer that manages transportation regardless of who or what is driving.
That seems to be the strategy. Control the rails, not necessarily the trains. It future-proofs them, ensures that even as technology evolves, those miles traveled still generate revenue for Uber. It's a really strong long-term moat they're building.
Okay, so let's try and bring this all together for you listening. We've got two companies, SoFi and Uber, both disruptive tech players, both recently proving they can be profitable.
Right, but with pretty different paths to future growth.
Yeah, SoFi is all about that digital ecosystem stickiness, getting those younger customers hooked into their banking charter advantage, and then just selling them more and more financial products over their lifetime, maximizing that customer value.
hmm While Uber is leveraging its massive, almost unassailable network effect. And the surprising thing is, they still have huge room to grow just by penetrating their existing markets deeper.
Right.
Plus, they're riding that generational wave away from car ownership.
Two powerful but distinct growth narratives, both built on achieving profitability first.
And, the common thread here is fascinating. Both companies are fundamentally betting on and benefiting from the changing behaviors of younger generations, which leads to kind of a provocative final thought for you to mull over.
Okay.
If SoFi succeeds in becoming the primary financial hub for these younger consumers, managing their savings, investments, loans, at the same time Uber succeeds because those same consumers are choosing not to own cars, relying on ride-sharing and delivery. How deeply interconnected are these trends? How much are these shifts in personal finance and personal transportation going to fundamentally rewire our economy over the next, say, 10, 15 years? We're seeing potentially huge structural changes in behavior. And these two companies, SoFi and Uber, they're sitting right at the epicenter of it all. A pretty profound transformation to watch unfold.